Okay, so one thing that I get asked pretty much every day now is what in the world is going on in tech? Why are there so many layoffs? Why is there hiring freezes? Like, is the industry crumbling? Is it still a good time to get in? Like, what is going on here? Because this is a pretty big deal and it's pretty widespread. The way that I like to describe this is to talk about how the macroeconomic conditions relate to tech companies, investment, hiring, sales, all of that kind of stuff. So I'll try not to go into too much detail, but I think this is important for everyone to understand. So what happened is back in Q2 of last year, inflation had already been going pretty wild for a good chunk of time, but it reached a point where the Federal Reserve, who decides what the benchmark interest rates are, decided that it was way too out of control and they needed to aggressively start raising interest rates in order to keep inflation from getting too far out of control to where the value of our money just wouldn't be what it is today. So what happened was they started raising little by little, and then pretty soon got very aggressive with the rates, much more aggressive than most times in history in terms of raising it in a condensed period of time. And the reason this matters is that when interest rates go up, risk assets, which are considered like stock in public companies or investing in private companies, those valuations fall. And the reason they fall is that there now is a relatively risk-free way to earn money for anybody who has money to invest without taking the big risk on these tech companies or other fast-growing companies that theoretically should multiply in value over time. But there now is an alternative, whereas when rates are close to zero, there's almost no alternative. In addition, tech companies earn money over an extended period of time, and so there's a lot of value placed on the future revenue that they're likely to generate now that they're landing customers. So all this to say that the rapid increase in rates has created an environment where investment into the private companies was plentiful, and now it's frozen or largely frozen for a while. And mostly that is not because these companies aren't growing or these companies won't be successful or that the industry is less important or less relevant in the future of our world or any of that kind of stuff. It is largely based on the fact that there is a reset because the value of these companies has essentially shrunk overnight in very large part due to the changes in the interest rates. So now that we know that, what happens next? So number one, the value of the companies are lower, which means it's harder for them to raise more money because the value has dropped rather than increased, even though they probably have increased their sales quite a bit. And the other important thing to know is that, especially if you're looking at startups, so private companies that grow quickly, they're designed to lose money. And I know that sounds counterintuitive. Why would a company that's doing millions of dollars of sales be losing money? It's because they're investing more in the growth at the expense of short-term profits. And that's totally normal. That's actually the playbook for a company that's funded by venture capital and those sorts of things in order to grow really quickly in a short period of time. So now that the game has changed and they're not going to be able to raise the next chunk of money, most likely, that they were counting on raising based on the old playbook, things have to change. And that change is being results in things like layoffs, hiring freezes, shifting spending, all of that kind of stuff. When those things happen, then other companies that maybe were selling to these companies or otherwise generating revenue in relation to them, that falls, and that has kind of a domino effect as you go through the tech economy. So I've gotten so many questions about this. I wanted to make sure that we got that out of the way. And now that we have a general baseline on that stuff, it's just important to understand that tech is a long-term game. The transformation we've seen over the last couple of decades is pretty dramatic. It's going to keep going. And I have not lost any confidence whatsoever in tech as a primary place to build your career. So anyway, I hope that's helpful. If you have follow-up questions, feel free to reach out to me on LinkedIn or otherwise, and we'll see you later.